Marketplace is supported by Putnam Investments, celebrating over 70 years of service to financial advisors, their clients, and institutions worldwide. Putnam Investments, a world of investing. Produced in association with the University of Southern California.
It's not quite a story of how the mighty have fallen, but the earnings report from Goldman Sachs this morning was kind of lousy. And yes, I think that was a bit of schadenfreude you heard out there. From American Public Media, this is Marketplace.
Marketplace is supported by Gather.com, the social network where people can make new friends who share their interests. People talking about today's news at news.gather.com. And by Progressive Insurance, helping people shop for car insurance at 1-800-PROGRESSIVE and Progressive.com.
From the Frank Stanton Studios in Los Angeles, I'm Kai Ryssdal. It is Tuesday, today the 20th of July. Good to have you with us. Goldman Sachs used to be different, used to be above the fray, if you will, able to make billions of dollars without even trying. That's part of why today's profit report landed with such a thud. It was, to put it kindly, a bit disappointing. Earnings dropped 82%. And yes, part of that can be chalked up to the $550 million the company owes the SEC to settle a lawsuit. Also, the $600 million that went to pay taxes over in the UK. But even so, things do look pretty bleak. Profits in Goldman's trading division were down almost 40%, making the bank look almost human and making us wonder whether Goldman's woes might be a reflection of the state of the economy. Marketplace's Elisa Roth reports.
Goldman's traders are supposed to be the superheroes of Wall Street. But last quarter, their superpowers failed them. Jeff Hart follows Goldman at Sandler O'Neill, and he says with the market going up and down all quarter, it was hard for the traders to guess which way to bet. So it's no surprise they lost money.
There's a bad trading and banking quarter, there's a bad trading and banking quarter all over. I don't know that there's a management team, a trader, or a banker out there that can consistently overcome a really bad, really tough marketplace.
Goldman was hardly the only bank whose trading divisions got beaten up in the second quarter. Traders at J.P. Morgan and Citigroup and B of A all did. Hart says in a crazy market like this one, though, winning isn't the point.
The key there tends to be managing risk exposures for the firm to make sure that, there's no major blow-ups or that that they're controlling risk well.
And he says by that measure, Goldman's traders did a fine job. Hugh Johnson is chief economist at his own asset management company. He says for once, Goldman's performance is in sync with the economy.
The earnings really reflect the fact that things changed in this world of ours in the second quarter, and they changed for the worse, unfortunately. And investors became very, very concerned about what the future has in store.
He says investors are pretty good at predicting the future. And if they're right about the way things look now, we can expect another bumpy quarter next time around. In New York, I'm Elisa Roth for Marketplace.
Speaking of bumpy, this has been quite a week for news about the government's bailout of the auto industry. Yesterday, it was poke in the eye for the White House about how it forced GM and Chrysler to shut down thousands of dealerships. Today, courtesy of the Detroit Free Press, comes some hope that taxpayers will get more of their bailout money back than we'd thought. Justin Hyde wrote the story in the paper today. Justin, welcome to the program.
Thanks for having me, Kai.
Let's start with the place that the government has most of its money and thus the greatest possibility of reward, I suppose. General Motors. How are we doing there, the taxpayers?
Well, the Treasury has put about $50 billion into GM over the past couple of years. GM has made some progress. Its sales have come back a little bit. More importantly, it's starting to turn a profit. And as you look forward to see some of the new vehicles that are coming out in the pipeline, things seem to be moving towards a positive direction for the company. We're all kind of expecting that by November, GM will try to put its shares up for sale again in Wall Street.
Explore that for me a little bit. What is the mechanism by which the Treasury Department might divest itself and thus get some of its money back? Do we know yet?
It's not quite clear exactly how fast or how slowly Treasury will unfold itself and unfold its stake. They've made comments in the past about trying to balance getting out of the company as quickly as possible with returning some money to the taxpayer. They don't want to have a fire sale that damages GM's share price.